These are all opportunities that are available for you to reduce the taxable value of your home so that your property tax bill is less every year. Hi everyone, I'm Lindsay Vallandingham with the Symphony Group at Keller Williams Global East. I am coming to you today with the very hot topic of tax exemptions on your property. Nothing more exciting than that, right? And yet, as exciting as it is, it's something that everyone should know about and many people probably don't know about. There's essentially some tax deductions out there that could be available to you, and I want to make sure that you're getting those ones that you're owed. That is money in your pocket. The Symphony Group works in 2 different states. So we're going to talk today about Kentucky and Indiana. They're very, very different. So I want to make sure that we talk about both of them. The similarities are essentially only that they exist, that there are exemptions available, and that the age around some of those exemptions is 65 and up. But that's about where the similarities end. For information like this that is saving you money, make sure that you subscribe to our channel to get the most up-to-date information weekly. We're going to talk about the state of Kentucky. The state of Kentucky basically offers what's called a homestead exemption or a disability exemption. You can only take one or the other. The amount of that exemption is $46,350. What does that mean? That means that the assessed value of your home, whatever the county that you live in assesses the value of your home to be, for either exemption, the homestead or the disability exemption, reduces that taxable value by $46,350. So, for example, if the county that you live in Kentucky deems that the tax assessed value on your property is $200,000, then with the homestead or the disability exemption in place, the value that you would be taxed on would be $153,650. So you're only taxed on that $153,000 assessment rather than the county's assessment of $200,000. I hope that makes sense. Now, as I said, Kentucky offers a homestead exemption and a disability exemption, and you can only qualify for one or the other. You probably know if you would qualify for a disability exemption. A homestead exemption, on the other hand, is for any homeowner who is aged 65 and up. If you turn 65 at any point during the year, you can file the tax exemption for the year that you turn 65. You just have to make sure that you have the paperwork processed and into the county no later than December 31st of that year. So that will affect the year that you turn 65. Moving forward, there's nothing further that you have to do. Once you have filed your exemption, you're done. Now, if you move, of course, then you have to refile for your exemption in your new property. This will only apply for your primary residence. So if you own multiple homes in Kentucky, it only counts for one of those that you claim to be your primary residence. Again, it only counts for those 65 and up. Now, if you're in a situation where multiple people of different ages live in the home, so long as the 65 and up person is listed on the deed to the property, then you can claim that exemption. They have to be considered an owner of the property. If you are, for example, a married couple and one person is 65, that's enough to be able to claim the homestead exemption on that property. It's not, you don't have to wait till both people are over 65. So Kentucky is pretty straightforward when it comes to tax exemptions. If you need information on how to be able to apply for this exemption, you want to visit the PVA for your county. Their website is going to have information for that, or of course you can always reach out to me for help getting that information. Let's talk about Indiana. Things are a little different, maybe a little bit more complicated in Indiana, but maybe even a little more tax savings in Indiana. Indiana offers many different types of exemptions. They actually call them deductions, property deductions or tax deductions in Indiana. An exemption in Indiana is only considered a fully tax exempt facility like a church. So mortgage deductions in Indiana can be stacked. Now in Kentucky, we mentioned you could either get disability or homestead and not both. In Indiana, you can actually stack your deductions against each other. Up first, we're going to talk about the homestead deduction in Indiana. This has the same name as the 65 and older deduction in Kentucky, but it is not the same in Indiana. A homestead deduction in Indiana is for anyone who owns a home. So you can file for a homestead deduction in Indiana if you claim a primary residence in Indiana. So you can only do that just for one home, just for your primary residence, for any aged person. The amount of that deduction is going to be the lesser value of either $45,000 or 60% of the assessed value of the home. So whichever one is lower. For a lot of homeowners, if you live in a $200,000 house or more, that's going to be $45,000. But if you live in a smaller house or a house that the tax assessment assessment isn't very high, then they might go with the 60% instead. Just like in Kentucky, you can apply for that in the year that you want it to take effect. Indiana's deadline, they give you a couple extra days. They give you till January 5th, but you're going to apply for that in that year, and that will set your homestead deduction from write-off. Next, in Indiana, we're going to talk about the over 65 deduction. So that's not the homestead deduction in Indiana. The homestead exemption in Kentucky is for folks over 65. I'm telling you, it's complicated. You can reach out to me. I'll help you with this. For folks over 65, you can apply in Indiana for the over 65 deduction, which you can mount on top of your homestead deduction. The over 65 deduction is for the lesser of $14,000 or half of the assessed value of the property. For most people, that's going to be the $14,000, but if you happen to live in a property that's assessed very low, then they would take the lower of the half of the assessed value. This is only good for properties that are assessed at a value of under $240,000. Remember that your assessed value is not necessarily the price that you paid for the home. In fact, that's probably only true in the year that you buy the house. After that, the assessed value can be very different from the price that you paid for it, and it can also be very different from its market value today, what you would list it and sell it for on the market. So those two numbers are not necessarily the same. What we're looking for is that assessed value as what the county determines the value of your property is and what they are taxing you on. The over 65 deduction in Indiana is for homes that are assessed at $240,000 or less. There are a few other criteria in there for the over 65 deduction, but the good news is that you can stack that with your homestead deduction, and the next one we're going to talk about, your mortgage deduction. You can stack all three of those. The mortgage deduction in Indiana is available to anyone who has an active mortgage on their property. That's a lot of people, right? And again, you can add this in addition to the homestead deduction, or you can add it to in addition to the 65 and up deduction. So you can stack these on top of each other. The mortgage deduction is for $3,000 or half of the assessed value of the property or the value of the mortgage, whichever is less. In a situation where you own a $200,000 home and you owe $180,000 on that property, you're going to have a mortgage deduction of $3,000, and you're going to be able to stack that on to your homestead deduction as well. These are all opportunities that are available for you to reduce the taxable value of your home so that your property tax bill is less every year. The goal here in educating you about these available deductions is to help you keep more money in your pocket. Our goal, as always, is to help you find your perfect key and to help you save money. If you have questions about this process, we're more than happy to help you get answers. Email us at symphonyrealtygroup@gmail.com.